Morning, Sean.
Good morning, Damien. And good morning to everyone. It looks like it is 9 o'clock on the Pacific Coast, which means it's time to start our California Franchise Tax Board training session. I'm Sean Gahn, the training coordinator for the St. Killian VITA site. I'll be turning the slides, but the training is going to be conducted by Tom Corsi of the Franchise Tax Board, and I'll turn it over to Tom.
Good morning and welcome. Once again, my name is Tom Corsi. I started with the Franchise Tax Board in 2016 as a tax technician. And then after a couple years, I joined the Business Entity Complex Account Division. And then in 2022, I joined the VITA team. And today I have with me, assisting me is Thalia Ruiz. And what we ask is if you need to ask a question during the meeting, you could put it in the chat, or sometimes it's best to hold the questions till after the meeting because a lot of things we'll end up answering as we go along. So with that, let's get started. Today, we're going to review California tax law training. And let's go to the next slide.
Right.
Okay, and one more. Okay, thanks. So what we'll review is the California tax law updates, the nonconformities between the federal government and the state of California, any new law changes, also useful franchise tax board information. We'll review the California healthcare mandate and the support that we offer you through the VITA program here at the Franchise Tax Board. Okay, let's go to the next. And next, the first thing we'll review is the California tax law updates. And this year, okay, taxes are due to the Franchise Tax Board by April 15, 2025. Now, the Franchise Tax Board does grant an automatic 6-month extension for filing a return. The important part to remember there that a lot of the taxpayers get confused is they think it also applies to any taxes that might be owed, and that's not the case. If they owe anything, they need to pay by April 15th. Let's see. For taxpayers traveling and or residing outside the United States on April 15th, the Franchise Tax Board automatically grants those people a 2-month extension on the due date for filing a return and paying taxes till June 16th, 2025. A penalty in this particular case will not be charged for this automatic extension. However, they will charge interest from the April 15th date to the June 16th date, which is not much. I think it's like 5% APR. These taxpayers residing outside the United States who cannot file their return by June 16th will also be given an automatic 6-month extension to file their taxes by December 15th. Let's go to the next one. This year, the personal exemption credits have changed in California. It's $149 for single or head of household, and then it's $298 for married filing joint or qualifying surviving spouse. And then for each dependent, $461. And for the blind and the people over 65, an additional $149. And let's go to the next one. Okay, so the California standard deductions for 2024 are $5,540 for single, $11,080 for married filing joint head of household, and qualifying surviving spouse. The standard deduction for the federal or the IRS is much higher than California. So you will see this. It is common for taxpayers to itemize on their state return and then use the standard deduction on the federal return. And let's go to the next one. So the California Earned Income Tax Credit. Now, this year, the maximum adjusted gross income is $31,950. And as you can see from the graph, if they have no children and they have the income that allows them to qualify, the max they could get is $294. And as you move down with 3 or more children, it's up to $3,644. Now, to get this particular credit, this California Earned Income Tax Credit, you must have earned income. You must be 18 and older or have a qualifying child. You must have adjusted gross income of 31,950 or less, must have a Social Security number or ITIN number. The ITIN number goes back to 2022. And you must have this for you, your spouse, and your children. You must live in California for more than half the year and must. Huh?
Oh, sorry. I'm trying to mute people as they come into the
Oh, I see.
conversation.
No, okay. I thought,
I'll
all
stay
right.
on it.
Okay. And not use the married filing separate unless that person had a qualifying child who lived with you for more than half the year. And let's go to the next one.
And then we do have a question in the chat. What
Okay.
is a qualifying child?
A child that you have custody over. So it could be an adopted child, potentially your own biological child.
Sorry.
Yeah. Thanks. All right. As far as investment income, there is a limit. If they have, they must have on the federal side under 11,600, but California's threshold is 4,674 of investment income. That's the limit. Once they exceed that, it would mess up their ability to get the earned income tax credit. And let's go to the next slide. Also, California has this. It's called the Young Child Tax Credit. In addition to the earned income tax credit, this one also gives an additional maximum amount of credit of $1,154 for tax year 2024. This credit starts to phase out as earned income exceeds the threshold amount of $26,626 and will completely phase out at $31,951. And for individuals with no earned income, maybe they have a business, there is a cap of 34,602 for the net losses. Okay, let's go to the next one. Next is the foster youth tax credit. The maximum amount of credit for the tax year 2024 is $1,154 for individual. This is considered a refundable credit, and the credit starts to phase out as earned income exceeds the threshold amount of $26,626 and then completely phases out at $31,951. And To be eligible for this, the child must have been in foster care placement while 13 years of age or older, and then is between the ages of 18 to 25 now, by the end of the tax year, I should say, and is eligible to claim the California Earned Income Tax Credit. This particular credit doesn't come up a lot, but when it does, there is no proof required of them. It's just them stating it as we will honor it. TaxSlayer also doesn't automatically prompt about this credit. So as a tax preparer, you have to remember to ask the taxpayer if they were ever in a foster youth situation. Okay, let's go to the next one. And this year, the California Renters Tax Credit. This is a non-refundable tax credit. It's the same this year as it was last year and probably many years before. It's $60 for single person, $120 for joint, head of household, and qualifying surviving spouse. What did change is they raised the adjusted gross income limit up a bit to cover inflation. So now $52,421 or less for filing status single. They need to be at that or under to get renter's credit, or $104,842 or less for filing status joint, head of household, and qualifying surviving spouse. So as I mentioned, the credit amounts didn't change, but the adjusted gross income limits were increased. Some additional requirements for the credit are the client was a California resident in the tax year being filed. Their California adjusted gross income does not exceed the cutoff limits. They paid rent for at least 6 months of the tax year for property in California that was their principal residence. And the property that they rent cannot be a tax exempt property. Okay, let's go to the next one. Nonconformities. We'll look at the difference between what the IRS does and the state of California. Next slide is this one. California residency. And it's defined as this. How it works is a full year resident is taxed on all their worldwide income. A non-resident is only taxed on the California sourced income that they're receiving. And then a part year resident is taxed on worldwide income and or California sourced income. And the next slide. Income that we do not tax in California. Unemployment compensation and paid family leave, Social Security and railroad retirement benefits, state income tax refunds, interest income from U.S. Treasury bills, bonds, or territories, in California lottery winnings. Now, all the above listed income is not taxed by California, but is taxed by the federal. As far as a manual change, there is no manual change needed for the first 3 bullet points, because TaxSlayer automatically makes these type of income non-taxable for California in the system. And the last 2 bullet points need a manual adjustment in TaxSlayer. On the next slide, we will show you what the path looks like on TaxSlayer.
And then Tom, we have a question in the chat. Social Security for a qualifying surviving spouse is non-taxable.
If it's just Social Security, that's my understanding. Okay. First, on what you want to do, first select income, then select interest and dividends, followed by interest and dividend income, and finally interest income from the 1099 INT. The amount in box 3 of the 1099 interest should also be entered in the box labeled amount of interest on U.S. savings bonds and Treasury obligations you want subtracted from the state return. And remember to select California for the state. Let's go to the next one. As far as
And-
California lottery winnings, select the state section, then select subtractions from income, followed by selecting California lottery winnings, then enter the amount of the winnings. The California lottery losses, however, are not tax deductible in California. For step-by-step instruction for the manual adjustments, refer to the Volunteer Reference Manual 5130.
So Tom, I just point out that we shared the slides with all the volunteers. So if they're trying to write all this down, they could just look at the slide deck.
Absolutely. Yeah. Am I going too fast?
No.
Okay.
Nope.
Okay. All right. So income that is taxed by California is foreign earned income and foreign Social Security income. Interest income from the District of Columbia bonds, and then interest income from other states' municipal bonds. So if you wanted tax exempt interest from a municipal bond and you're a California resident, a good idea to buy a California municipal bond. And let's go to the next one, 19. Alimony. So alimony received must be included as income on a California return, and then the person paying the alimony can deduct it on the California return. For 2019 and after, for divorces excluded or modified after December 31st, 2018, the federal law doesn't require the spouse receiving the alimony to include the alimony payments as part of his or her gross income. This is one of these cases where California does not conform with the IRS. In TaxSlayer, you want to enter the alimony amount received or paid under the federal section, and then enter the name of the person receiving the alimony in the state section. It makes more sense when you're actually in the program, but if you come across it, you'll have some idea of what to do. Next, we'll look at any new law changes that would apply to this. Okay, so they added this one. If you have what's called a 529 plan, which is like a savings plan for tuition, someone going to college, maybe a parent set it up. What they changed is, I mean, there's times where these plans aren't utilized, and then the parent is stuck like, well, how do I deal with it? What they've allowed now is a direct rollover to a Roth IRA at the federal level without any penalties. Special rules were added to the federal law, which allow this distribution from a 529 tuition plan to be rolled over to a Roth IRA without a tax or penalty. An amount distributed from a 529 plan to a Roth IRA will be treated in the same manner as the earnings and contributions of a Roth IRA. Let's go to the next one. So a little more on this. Distributions from this 529 plan to a Roth IRA. Here's one of the catches. The 529 plan must have been maintained for at least 15 years to do this type of rollover. And only to distributions after December 31st, 2023. California doesn't conform. A rollover distribution from a 529 plan to a Roth IRA is included in California taxable income and is subject to an additional tax of 2.5%. And next, we'll just go over some general useful information. And I don't know how often you guys actually get involved with a taxpayer making a payment, but we just want to go over this so that in case they ask you, you can advise them how to make payments on the Franchise Tax Board website electronically. It is important to choose the correct payment type when you're entering the payment online. A wrong selection may cause delay in processing your tax payment. So when they're online making a payment, use one of these following bill payment types. So if they're making an estimated tax payment for the year ahead of us, for going forward, you want to make sure they actually are hitting estimated tax payment and not hitting one of the other choices like bill payment. These are the different types of payment choices they'll see, though. They'll see the estimated tax payment, bill payment, tax return payment, amended tax return payment, extension payment, notice of proposed assessment, or a Form 3834 payment, and a pending audit tax deposit payment. So they select the wrong type, it can cause some problems for them. Let's go to the next screen. And here's some of the more common issues that happen. Users will select amended payment type because they received a notice of tax return change. And what that is when a tax return comes into the Franchise Tax Board, sometimes we see an error on our end and we just make the change. No amended return is needed, and then send them a bill. So what people think is, oh, they made a tax return change. That must be like an amended return. And then they submit the payment in as an amended payment, and it sits idle somewhere else waiting for an amended tax return to come in, and it doesn't pay the bill. It just sits there. So if they get a notice of tax return change, they definitely want to hit the bill payment one and not the amended return one. The only time they want to use the amended tax return payment type, it should only be used when a taxpayer actually files a current or prior year amended tax return with a attached Schedule X. Let's go to the next one. So, as you know, this is always a problem, identity theft and scams. And at the Franchise Tax Board, we do work diligently to secure taxpayer information and prevent tax-related theft and fraud. And here's some possible identity theft indicators to keep an eye out for. Tax is due, but the taxpayer did not file a return. Or the taxpayer received an unexpected refund. Or the Franchise Tax Board rejects an e-filed tax return because they state the return's already been filed. Those are the more common ones to keep an eye out for. And let's go to the next screen. Identity theft and scams. So what the Franchise Tax Board has are these different notices. The first one is called a 3904. A tax return was filed and confirmation is received to process the tax return. Or they may receive additional information is needed to confirm wage and withholding discrepancies. Sometimes on the W-2, it'll show a certain amount of withholdings. And when we processed that return, we weren't able to locate all those withholdings. So what they would ask for is maybe a hard copy of the W-2 the employer issued to correct the problem. And the third one, this is typically done when people are trying to qualify for the earned income tax credit, the young child tax credit, or foster youth tax credit. A lot of times the Franchise Tax Board will request additional information to make sure this taxpayer is in fact eligible for those credits. So if they get a piece of mail like that, it's important they respond to it so they could get their refund. I'm gonna Celia, can you put a phone number? I'm gonna read it to you in the chat so people could take it down in case
Of course.
they have a theft situation and want a number here for direct access to our theft unit.
So this is
ID theft number 916
one moment. Okay, 916
845
845,
7088.
and this is for
Identity theft and fraud. Yeah.
it is
Okay.
in intent,
Thank you.
of course.
And let's go to the next slide. Another thing to be aware of is text messages from the Franchise Tax Board. Well, the Franchise Tax Board just does not send text messages to request personal or financial information or account numbers. So if you did not request to be contacted by text message, do not respond or click on any links you receive via text. And, the next one. As far as us sending text messages, the Franchise Tax Board will only send text messages when individuals with a MyFTB account updates their profile and requests to receive that text message alert from the Franchise Tax Board. If one of the following activities occur on their account, a new notice or document is available to view online. They request submitted for power of attorney to access your account. FTB approval for the submitted power of attorney request. And an update made online to add, change, or remove text messages. For those who aren't familiar, this term My FTB account, it just means log in to your own account on the Franchise Tax Board. It's a really nice thing to have because a person could log into their own account, see what the situation is, and not have to wait on a phone on hold. So it's a nice thing to have. If anyone asks, should they get it? I would say yes. Okay, let's go to the next slide.
And just a question to confirm, everyone can see the identity and fraud phone number, correct? I placed it once in the chat.
Yes.
It's
Yes.
in the
Okay.
chat. Yeah.
Okay, perfect. Thank you for confirming.
Thanks, Leah. Okay. We're going to view the California healthcare mandate. This took effect January 1st, 2020, and minimum essential healthcare coverage has been required for all California residents and their dependents. And this requirement is continued for the 2024 tax year. One of the reasons we bring attention to this is, out of the 50 states, only 5 of them require this California, or the healthcare mandate, I should say. So if they're a non-resident in another state, there's a good chance they won't have to have health insurance, although it's a good thing to have. Let's go to the next slide. So for California, if you don't have the health insurance, the penalty amount for this year, or for 2024, is $900 per adult and $450 per minor, or it could be 2.5% of the gross income amount that exceeds the filing threshold. It'll be whichever one is the highest, but because we target market more of the low income people, it's more likely to be one of the either the 900 or the 450 per minor. Now, if a child turns 18 mid-year, the adult penalty of 900 would apply. Okay, and that is good. Let's go to the form 3853. This health coverage exemptions and individual shared responsibility. This health coverage exemptions and individual shared responsibility penalty form is required to be completed on a California return if any taxpayer or any members of their household did not have health care coverage or an exemption for all or any part of the year. This form needs to be completed in TaxSlayer in the state section, and for step-by-step instructions on how to complete this form in TaxSlayer, we have a video on our website at the Franchise Tax Board website, video number 11, to go into more detail about this. Also, you can always refer to what's called FTB 3853 instructions for additional information. That is available on the Franchise Tax Board website as well. Next slide. And one of the important points to remember, and you want to keep in mind when completing the form 3853 in TaxSlayer, is that the form needs to be completed separately for each member of the household on the return. There's a drop-down menu that allows you to select the name of each person and complete their information on the form. Let's go to the next one. Also, after completing that form, the 3853 in TaxSlayer, it's important to print screen the form and review part 3 of the form and make sure that all persons on the return are listed with corresponding codes indicating health insurance or any that they had health insurance during this time, or they had an exemption. There are exemptions that you will be able to see in 3853. Okay, let's go to the next one. On the 3853, this is a list of what exemptions are available. You can find the codes on the form. You don't need to memorize any of this. It's just keep in mind if they qualify for some exemption, here they are, list them in there so that they don't get as much of a penalty or no penalty if they qualify for an exemption or they actually had health care coverage for part of the year. Let's go to the next one. And we're just going to review some of the resources that are available to you from us. Let's go to the next one. So we have training videos that we update every year. The videos are short and include information on federal and state tax law. It is a great training tool for the new volunteers and a good refresher course for the returning volunteers. And basically, you could access these videos on the Franchise Tax Board website, but they're actually on YouTube. But that's the way to use the link to get to them. Video number 12 will cover what's new for tax year 2024. And then video number 11 again is the one that covers the healthcare mandate in a little more detail. Let's go to the next one. We have some great information and resources available on our website to assist FTB or VITA volunteers and site coordinators. On the resource and training page, we have links for requests for training form and VITA material order form, as well as links for the California Volunteer Reference Manuals and military manuals. Also, the link for the training videos that we talked about is on this page as well. Let's go to the next screen. Okay, so this page on our website is where volunteers, if they're just curious to see where they stand, they can check their own knowledge of California tax law. VITA does not require certification for California tax law. However, we do have a short 15-question test where you answer the questions, and if the answers are correct, they will get, you'll get a certificate that you will be able to print out. The questions are based on the information mentioned in the California Volunteer Reference Manual. This is just something that sometimes people wonder, well, do I really know this or not? They can test themselves. They don't have to do this. It's just a tool that's available. And the web link is, it shows there. It's VITA Knowledge Check. Okay, next screen. So to help assist you, we have a dedicated VITA hotline number, which is in the screen, to 800-522-5665 for some general questions. Now, on the more complicated questions, what we ask is you email them to volunteercoordinator@ftb.ca.gov. And these can be questions on California tax law, questions on tax layer, questions on prepare and returns, verify payments that were made electronically. We have access to see if we at the Franchise Tax Board did receive a payment. As long as it's an electronic payment, we could look it up. And verify Also return status. So if you submitted a return electronically, we can confirm that it was actually received. If you need that type of information, just call us at the 800 number listed there. Let's go to the next screen.
Tom, I have a question.
Yeah,
What are the hours for the hotline
8 to 4:30
during the week?
Monday through Friday, except
Okay.
state holidays. Yeah.
Okay, because our site's only open on Saturday, so we'd have to have somebody.
Yeah. Well, they could, you know what they could do is just use the email system.
Yep.
Yeah.
Okay,
All
thanks.
right. You're welcome. And then let's see where we are. Okay, so this is what's available for the taxpayers that you will be assisting. The first one listed is the My FTB account, which is probably the best because they can actually access and see their own account online. But if they need to talk to someone at the Franchise Tax Board for help, that 800 number, 800-852-5711 is the number they would want to call. There's also a chat available on the Franchise Tax Board website. And we have about 5 or 6 field offices through the state of California. If they need to talk to someone face to face, of course, they would make an appointment first, but it is an option available. I did want to mention one thing. The other 800 number I gave you, the VITA hotline number, that's just for tax preparers. It's not really to be used for the general public, where this phone number listed here is. So that's the big difference.
So
All
Tom,
right.
there's a question in the chat. What is the response time on the emails?
Oh, that's a good question. You know, it depends. A lot of times it could be the same day. But if it's a little bit more complicated, it could be a couple days. But they don't sit. We try not to let them sit there too long. I peek on that particular email box, and usually they're addressed pretty quick, considering how busy it gets. And also, yeah, it does depend on when they send it, because it'll be more busy in April than it will be in January. But we do our best as fast as possible, is all I could say.
I could share some advice on the telephone for taxpayers because I went through this myself last year.
Uh-huh.
It's good to call early in the morning
Yeah.
because you could wind up on hold for a long time, but you can put yourself in the queue and they'll call you back when they're open.
Good one. Yeah. Let's go to the next screen. Also, we ask, we're always trying to add or make things a little bit better. If you have time, or when you do have time, take a few minutes to let us know how we're doing. And with that said, I can now answer or try to answer all your questions, but I want to thank you for coming today. And any questions?
Can I ask a question on something we didn't really talk about?
Okay, I'll try.
It's in-home support services.
Okay. Uh-huh.
So why is there sometimes when they'll get a W-2 for IHSS, but there's no dollars in the income
Okay.
box one?
I know what you're talking about. Okay, so this in-home support services, here's the deal with that. There's 2 possibilities, and here's what just makes them different. You have someone, let's say, who's helping a sick senior citizen. If the person helping the disabled person, if they live together in the same house, then the box would be 0 to indicate don't tax this income, make it tax-free because they live together. But if there's money listed on that form, then they don't live together. And this person is just going there, say, for an 8-hour shift. So that's the distinguishing difference between the two. One is for
And
when
I've
you,
heard that, I
yeah,
understand that, but I still see times when people are
yes,
getting those W-2s who do live together and has
right.
money in there. But so now my next question is, so if somebody does live with who they're taking care of, and there's $0 in box one, there's something in, I think, the FTB guide that says to get them earned income tax credit is an option. And if that's the case, you mean we would put the amount of income into box one, even though there was $0 in it, or can we even do
Um,
that?
you can if it helps them. That's the key. It's a case by case base. Sometimes they need that so they get the credit, which would end up getting them more back. So it will be okay to list it. But what I was going to also address is the people who get those forms that imply they don't live together when in fact they do. If they say they live together, you need to submit it as non-taxed income. And there's a way to do that in TaxSlayer.
Yes, I understand that part.
Okay.
Yeah. So, but you're saying that it is okay to override box one from
If
0
it
to
gets
whatever
some
that
more
number
back,
is?
if it gets some
Yeah.
more back, that's the
Okay.
key. Yeah.
All right.
Anybody
Thank you.
else? You're welcome.
Tom, I just wanted to mention to all the people on the call that I put the link for the post-training evaluation survey into the chat. So
Great.
anybody who wants to provide feedback can do that. Or if you received a copy of the slideshow, it's the second to last slide.
There you go. That's right. Anything else? Well, okay.
All right. Thank you.
Thank you. You
very
guys
much.
have a good weekend.
Bye,
Okay.
everyone.
Bye. All right, so we're going to ask the St. Killian volunteers to stay on the line. And everybody else, that's it for training for 2024. And time to get your certifications done and work with your site coordinator to get ready for tax preparation for 2025.
So Sean, you might want to clarify the term St. Killian volunteers. You mean the
Oh.
5 or 6 of us?
Well, I don't know if Mel wanted to say anything to all the other St. Killian
Oh
volunteers
yeah,
first.
definitely. Okay.
Hey,
Well, yeah,
Sean,
they could stay.
Sean, can I speak first before
Sure, Fred.
I'm driving right now. I just parked.
Yeah.
I just want to make sure if we are gonna have this meeting, if we I asked Susan yesterday if she's gonna join us. So if you can give her a courtesy call, she would like to, if she can, she would like to attend this meeting, so she
Okay.
can relay more
Sean, are you
information.
going to stop the recording?
I have paused the recording. I'll stop it right now.
Okay, and